weapons and facilitation of weapons. If NATO can do that, if the European countries can do that, if we can get them quickly, particularly through Poland, then that's what we need at this point.
Maria, I'm not going to go over the untranslated comments of Mr. Putin, but there was his discussion, the romance he perceives back before his birth in the early 1950s to World War II, where he mentioned Nazi Germany twice directly in his language. How will Germany respond to that?
Well, what Germany's saying is that that is a complete revision of history that has no place. They remind everyone, by the way, the government in Ukraine was voted, and you can criticize, and we should, the Ukrainian government. So we could argue that for years they've done no service to the Ukrainian people. There's many endemic problems in that country, but the government of Volodymyr Zelensky was voted for people. By the way, when he's called a Nazi, he just went on TV to say, well, I'm Jewish. How can you tell me to my face that I'm a Nazi official? Now, the question will be now, what does Germany do in terms of the sanctions? We know that they have a huge voice in Europe. We know there's been debate throughout this morning. But I have to tell you, Tom, the mood here in Brussels has changed over the past 20 minutes. A lot of this has to do with the reports of fighting near the capital of Ukraine. And I hear from more European officials that are saying we need a big package today, and perhaps again the debate about whether or not Vladimir Putin should finally be on that list.
And Marie, we're talking a lot about sanctions. We're not talking about troop presence. We're talking about protecting NATO land, not necessarily Ukraine, which is not part of NATO. Has that conversation shifted in Washington, D.C. in terms of adding some troop presence to NATO in some of the surrounding nations?
So on the first point of whether or not there'd be U.S. military presence in Ukraine, that conversation has not shifted at all. But I imagine you will hear the president say that he will continue to defend NATO land, and that would mean potentially continuously to bolster the eastern flank. But this is not new. They have been doing this over the course of weeks, as the U.S. government has been very forthright and very transparent on the intelligence they were collecting on President Vladimir Putin's plans that have pretty much come to fruition today.
Maria, a lot of people have been saying that we really were not prepared for this type of outcome, that people were expecting Vladimir Putin to move more slowly and do more saber-rattling than actual actions. Can you give us a sense of the tone, how surprised European officials have been?
Well, it depends who you ask. When you talk about Europe, there's 27 different voices. I did hear officials who used to argue, well, the United States at this point is sharing way too much. A lot of this is creating hysteria. We see today that, by the way, the U.S. got this spot on. But when I speak to Baltic states, particularly Lithuania and Estonia, they've said and they've told me for weeks, this was not about the Donbass. If you read particularly, they keep pointing to this essay that Vladimir Putin wrote last summer where he said the collapse of the Soviet Union is the biggest tragedy our country ever went through, and the idea that an independent nation state, Ukraine, closer to Europe, that is an abomination of history. They always said this was never about the Donbass. This is about changing a regime in Ukraine that will be a puppet government for Vladimir Putin. And by the way, the Russians don't make a secret of it. They say it today, want to remove the government.
Tom, just getting a headline from Senator Manchin, who says the U.S. must impose crippling sanctions on Russia. Tom, the question I would ask is, can you impose crippling sanctions on Russia without crippling Europe?
Well, no, there's a SWIFT system in the financial transactions of hydrocarbons involving millions and millions and millions of dollars. The answer is you can't do it. And Maria, I think that goes to waking up in 18 hours or whatever to day 2 of this Russian action. We are surprised by the speed of their movements. Is there any discussion of their movement west of Kyiv?
Well, what we know is that the whole attention is based on the capital for 2 reasons. Of course, this is the biggest praise. This is also a propaganda war for Vladimir Putin. It'd be great to say, look, here we are. It took less than 24 hours to get to the center of the country. The other issue, Tom, and this is very important, is that what happens if the Ukrainian government somehow falls in the hands of the Russians? I don't want to speculate, but you can imagine the many scenarios that could open at that point. And for the Europeans, if Zelensky is not there, then who do you speak?
AMH, work with me here. These numbers from Javier Blas of Bloomberg Opinion earlier this week. In a single day this week, this is the US, the UK, the EU, likely spent close to $700 million in a single day on Russian commodities. He goes through it point by point. $350 million worth of oil and refined products, another $250 million worth of Russian natural gas, millions on aluminum, coal, nickel, titanium, gold, take your pick. AMH, this is the issue for Europe, for the world. They've stayed on the page so well over the last several weeks. They've kept that unity. When Senator Manchin says crippling sanctions, I'm just wondering where the offset comes from the Europeans, the dependence on Russian commodities. Anne-Marie, where's the offset coming from?
It's a huge dependence on Russian commodities, Jonathan, and not just all of those base metals and oil and gas, fossil fuels, wheat as well. This is a huge potential, if they're going to sanction these products, inflationary story that is going to backfire on the United States and on Europe. Where can you get other fossil fuels? Well, if it's going to be oil,
right,
it's going to be a call to Saudi Arabia to pump some more. And then if it's natural gas coming from Russia, which is much cheaper, you can get LNG from the United States, Qatar, and some other regions, but it's much more difficult. But we should note, the one thing that could happen, which could be an argument for this administration to not sanction Russian oil and gas, is that if you were to do that, what would the price of Brent be right now? I would argue $150 to $200. If you take that price, President Vladimir Putin could then usurp the sanctions, send his fossil fuels to China, and make a tremendous amount of money on an increased price that will only hurt U.S. consumers.
Emery Horton in Washington will continue through the morning with her, and Maria Tadeo in Brussels as well. It is Bloomberg Surveillance till 12 noon today. Thrilled to have you with us, John Farrell, Lisa Bramowitz, and myself on radio, on television. And John, there are the big stories. And then, John, there are quiet little stories. This from the Associated Press moments ago in Gelsenkirchen, Germany. John, you can translate this for us. German soccer club removes Russian firm Gazprom from jerseys.
Gazprom,
that's where we're heading.
A big sponsor of European football, Tom. And there's been a conversation all this morning about what to do with that Champions League final in St. Petersburg, Russia, later in May. Of course, that story is not even secondary to what is paramount this morning.
Yes.
It's what's playing out in Ukraine. And the words that the Russian president, Tom, used overnight, as Maria stressed, these are the words. They are the words of the Russian president himself, vowing to demilitarize the country and replace its leaders, not hiding the objectives here, Tom.
And again, for those just joining, the speed of movement that we've witnessed across 3.5 hours of broadcast has been, I've never seen it, John. The movement south from Belarus, extraordinary.
We get lucky this morning, TK. Fantastic lineup through the hour. Morgan Stanley's Mike Wilson, JP Morgan's Elise Ossenbaugh, and Eric Knudsen of Neuberger Berman. Mike, to come to you first, sir, what has this changed for you, Mike, overnight in a single 24 hours?
Well, look, I think it just accelerates some of the ideas we've been propagating already, which is that we think there's, the bigger issue now for equities is slower growth, right? Obviously, we've dealt with inflation via, more rate hikes and tightening from policy. And I think that's, flowed through equity valuations pretty swiftly. And, our view now is that now we have to deal with the slowdown that we think we're in the midst of in the U.S. And obviously, an event like this does not help confidence, right? Our view is that consumption is going to disappoint the first half of this year for a lot of reasons unrelated to, this invasion. But of course, now we have this invasion. That's not going to help consumer confidence. That's going to make our consumption story probably more front and center. So, look, nobody knows how this is going to play out day to day, week to week. But clearly, we've priced a lot in now. We've come a long way, and from an investor standpoint, prices are lower. That's always better. But obviously, this increases the probability of a swifter realization of our ICE narrative.
So, Mike, typically, when you introduce geopolitical risk, people would be willing to fade that knee-jerk reaction. I don't hear that from you this morning. Is that right?
Well, no, because of that first part, right? Normally we would, because this would be kind of an event you want to step into, but we already have sort of a negative view on growth, and this is just going to make that worse. Now, what I would say very tactically, and this is not for most of the viewers, but could we get a relief bounce here? Yes, I think we could, because we're extremely oversold, and volatility is extreme, and people are putting on hedges, and that always leads to some relief. But that's all it is. It's going to be a relief rally in which probably to lighten up, because to us, the bigger risk for equity markets is still to come. And that risk is earnings revisions and sort of the growth expectations coming down with or without, this event.
Elise, do you find yourself agreeing more with the Mike Wilson view of markets, or do you think that perhaps the environment for the economy for markets is more sanguine?
We are more sanguine than what Mike just walked through, mostly based on, the fact that consumers remain very strong, balance sheets across both the corporate and household sector remain very strong, and while these tensions will continue to perpetuate market volatility for the time being, kind of looking through that noise and using what we have learned from historical studies of such geopolitical tensions.
Listen up, y'all. Welcome to Shabu Shabu, your first day of orientation. My name is Dennis. I'm going to be your general manager. Welcome to the family. As you guys know, the food serves itself. The shabu shabu, the meats get dipped in the miso. Dipped
Dip the meat
in the miso. Correct. See, thank you. And there's no preparation really.
Oh, the best of my
job is very But
is anybody bothered by the string that's just like it's
I would like to teach you guys everything you need to know. And you will be serving the food to the customers.
No one cares about the string.
you are very
Pay attention.
but it's just like
Questions, yes, please.
yeah, you just have a string.
Does
that's
this have
like,
anything to do with shabu shabu?
Shasha, what now?
The type of restaurant you're working at? Shabu shabu.
Shashu.
Shabu shabu.
Sushi.
No! Shabu shabu.
I'm following, but I'm not understanding. Is this
It's literally 2 words. And it's the same word twice.
Shabu.
just pronounced?
Shabu shabu.
It's just pronounced kind of weird. Anyway, but there's a
Silence! I will not tolerate the interruptions. Now pay attention, okay? Do you want to work here or do you want to be fired? You're not even hired yet. This is orientation.
You know what? Is anybody else like?
Will you leave us alone?
It's just right there.
Leave us alone!
Are you blind?
Am I blind?
like
Are you
your eyes
illiterate?
If you just
Stop with the interruptions.
Okay.
Pay attention.
Okay.
Do you want to make $7.50 an hour or not? Okay then.
He doesn't.
That's not even that much.
He clearly doesn't. Why are you even here?
Much of that, Tom, this morning.
Yeah, well, I mean, the stage is set is out the window. I mean, we're deep into February, John, and with this most historic day. And, I'm sorry, John, some are going to go back to Yalta and on to 1991 and on to this historic day and what we'll see from Mr. Putin in the future. Neuberger Berman is an opportunistic shop. Mr. Knutson of Neuberger Berman, what would you suggest can be the change or the opportunity for investors?
Yeah, first of all, we want to highlight that we're in the midst of a tragic and challenging situation, and so we want to highlight that. We want to observe that there's a lot that's unknown, and that this is a rapidly evolving situation. The most important elements here, and this gets to something Mike said, is that this amplifies some of the trends that we had identified earlier this year, and that this 2022 would represent a much more challenging growth inflation mix than what we experienced in 21. And this amplifies that. This makes the growth side more challenging, some more headwinds to growth here, particularly in Europe, but it also amplifies the inflation side, which is different this time relative to other risk-off environments. And you compare this to other times where we've been challenged by geopolitical risk, whether it was Crimea or other examples, in the last 10, 20 years, that's been in a time of commodity abundance. We're now in a period of relative shortage of not just energy compared to prior periods, but also industrial metals. Russia is a large exporter of aluminum, palladium, and platinum. So from a shorter term or more opportunistic standpoint, we have been overweight commodities. We say there is more room to run in commodity exposure as well as in inflation hedges, because that's the side of the equation that is quite different from the last couple episodes that may look like this or rhyme with this.
15 minutes away from the opening bell, futures down 2.3% on the S&P. On the Nasdaq, we're down by 2.8%. Just hearing from the White House, tweeting the following. President Biden met with his national security team in the Situation Room this morning to discuss the latest developments in Ukraine. He discussed how we will hold Russia accountable for its unprovoked and, Lisa, unjustified attack on Ukraine.
Okay, so now we're dealing with what the actual consequences are going to be, especially as European leaders actually do meet. Are we going to hear something about oil? Are we going to hear something about meaningfully accepting the higher costs at a time when this is a hugely political issue for Biden and, frankly, for all of the European nations as well?
That's the offset I'm trying to think about. What next? A tax holiday for gas prices in America, a gas tax holiday, an Iranian crude deal, a reserve release again. They're the three options on the table. For the Federal Reserve next month, this gets really confusing. Evercore write this, and this was the quote for me that stood out in all the research this morning from the team. They basically lay out why they're not ready to fade the headlines yet. And here's the quote. The way that the stagflationary energy shock combined with sanctions disruptions will complicate the ability of central banks on both sides of the Atlantic to engineer a soft landing from the pandemic inflation surge. And Mike McKee, to bring you into the show, sir, and thanks for being with us. How difficult is it for the Fed next month?
Well, by next month, we may have a little bit easier path. We may understand more about what the sanctions are going to do and what the result of this invasion is. But for right now, nobody knows anything is basically the bottom line. We have a host of Fed speakers today, and they are probably all going to say we have to watch this very closely. It's the fog of war. Russia is going to face high inflation, and they will almost certainly face recession. The ruble, as you've been saying, is falling, and that will probably lead the central bank to raise rates. That hurts the people there. But the total impact is going to depend on what sanctions are imposed and how long the conflict goes on. 36% of Russia's budget comes from oil and natural gas, so that's one way to hurt them. For Europe and the UK, it's a different story. A higher inflation is certain. The recession risk rises. The impact, again, depends on the sanctions and the length of the conflict. The ECB's inflation dilemma is that if they do cut off oil and gas, it's obviously going to raise inflation tremendously there. They may have to hold off on their rate increases until 2023. The Bank of England, because of the Brexit problem, probably goes ahead, but maybe slower rate moves. And here in the United States, for the Fed, higher inflation is certain, growth at risk, but probably no recession. Supply chains are going to suffer. Watch out for cyber retaliation. That could be a big issue in the U.S. The balance of risk for the Feds between inflation and growth. Right now, they'll look past inflation because if it's energy, it will probably be temporary, and they'll focus on the growth link, which could slow them down.
We've been hearing about temporary inflationary shocks for a while, Mike, and we've been hearing about how some of the rollover effect, the comparison periods, would be due to oil prices coming back down, and that does not seem to be a likely possibility. With a robust labor market and inflation running at the fastest pace going back to the 1980s, how does the Fed justify taking a step back and actually having this be somewhat supportive to an economy that, by all measures, seems to be doing really well?
Well, they're going to have to measure the balance of risks between growth and inflation. And right now, inflation would win. Growth is very strong. But the risk to growth could come once we know what the sanctions impact is going to be. They're probably going to err on the side of growth, not let unemployment rise too much. But it is a real dilemma for them. They certainly don't want to ease into an oil price shock as they did in the 1970s and really create an inflation problem.
Mike McKee, thank you, sir. As always, if you're just tuning in worldwide on TV and radio, special coverage for the next 3 hours with Tom Keene, Lisa Bravitz and Jonathan Ferro. Futures Day.
From the day I saw your face was the day I wanted to change. That distant love wasn't used to a thing. Gave me a reason to think I'm insane. Nothing's the same. Nothing's the same. Why won't you?
Fast it's going to be that growth starts to really roll over, right? Because we're now getting to levels where there may be demand destruction. That's been part of our thesis, and that may play out now faster. And so if that happens, we could see the Fed pivot at some point in the next, say, 3 to 6 months. But it won't be for good reasons. It'll be for reasons that are probably equity disfavorable. That's the challenge. You're getting squeezed on both tighter financial conditions and slowing growth. And that's our thesis for 2022. It's just playing out faster than we anticipated because of this unfortunate event.
Mike, you hear a lot about the S word, stagflation. We've asked several guests through this morning whether the game has changed for them, whether they're ready to talk about stagflation and what it means. When you go through various scenarios and introduce the stagflation word to the conversation, Mike, where do you want to be in that environment? Where in this market?
Well, I mean, historically speaking, stagflation is not particularly great for anything. I mean, commodities is the easy one to kind of say, okay, fine. You know, anything that has variable income that can grow in a world where there's inflation, like that's not really our base case. In other words, I would suggest strongly that if inflation gets out of control or it doesn't come down, that it's going to have a, it's going to have a recessionary effect. Okay. And that therefore policy can reverse course. I don't think it's the 70s. I think it's the 40s. As you know, we've written about this extensively. I think the risk we have now is a boom bust, classic boom bust scenario. Last year was a boom, everything's short. We have supply now picks up. You actually get a deflationary whiff in consumer goods. That's kind of our base case. That sounds good on the surface. The problem is it's bad for growth. So we got to digest that. And that's probably 2 quarters of digestion. We'll come out the other side of this on the back end. Notwithstanding, we don't know what's going to happen with this event that we didn't predict, obviously. But let's assume cooler heads prevail at some point later this year. There could be an reacceleration expansion later this year, but we're just not there yet.
Right.
We're not priced for that, and we're not in a place where growth is going to accelerate anytime soon.
Mike, what will the deep pools of money do? What will private equity do? What will the cash cows of corporate America do here? They've got a huge down market opportunity. Do you, James Gorman and all, just suggest they will go, go, go?
Well, there is a structural change. I would say, 10 years ago, Tom, everybody was afraid of inflation after the GFC. We didn't get it because obviously the money never left the banking system, right? It was stuck. And there was secular stagnation. It's different this time. We pumped the money right into the economy.
Yeah.
That was different. Helicopter money. We have inflation. We got more than we bargained for. And so there is an argument, to be made for the great rotation is now upon us. And that's what we're seeing with our asset owner clients, be it individuals or pension funds, et cetera. They've made the active decision to reduce, bond exposure, increase equity exposure permanently, right? That will buffer some of the downside, in my view.
Yes. Well, it's going to buffer the downside, but then what that comes down to is what everybody owns. There's retail own, there's hedge fund own in that. Let's ask the elephant in the room question, which is what does big tech do here?
Well, as far as the stocks go, we're seeing what's going on. We're working off a unsustainable valuation bubble in a lot of parts of the growth markets. All right, that doesn't mean the fundamentals are in terrible shape. It just means these companies need to grow into valuations that were unsustainable for the world that we're in now. Regime shift towards higher inflation, higher cost of capital, and so I'm not of the camp that it's value versus growth and you can only own one, not the other. I think it's just going to be more idiosyncratic. Let's pick, securities that have, the reasonable pricing for the growth outlook that's achievable. And so that's going to be a mix of value and growth. It's not one or the other, but I would say the growth stocks still have some downside with respect to valuation.
Eric, we've been hearing a lot about the United States and sort of the incredible momentum that the Fed is facing off with and has to justify somehow a dovish tilt with. From your perspective, how different is the picture right now in Europe, especially given the exposure to Russia directly through gas and oil, but also just economically?
Yeah, this does change things on the margin, certainly from a economic growth expectation standpoint. It also changes things from a fiscal or a monetary policy standpoint. It is quite possible that this represents kind of peak hawkishness in terms of expectations for central bank rate increases. You've already seen the 50 basis point increase in March taken out of expectations. The market was pricing 6 to 7 increases by the Fed, 5 increases by the ECB. We've been on the under on that, and don't think that now that the central banks will have to raise rates as much. They can move in a more measured and gradual pace as they try to assess this more challenging growth and inflation mix. As we work with our institutional clients, they've been assessing relative opportunities in Europe versus and Japan versus the U.S. And we've been, gradually tilting into those areas. Europe, up until, basically 12 hours ago, has been outperforming the U.S. from an equity standpoint this year. And so, this is a much bigger picture than just one action. To size this, the GDP of the Ukraine is $164 billion.
What's up, my nigga? You good?
Should get something to eat.
Here.
What up, Lo?
What up, my nigga?
A nigga put me out the police just put me out the building.
All right, I'll see you in a minute here.
I love you, man.
All right, be cool.
I love you, Lo.
Love you too, bro. Go ahead.
Man, I love you, man.
All right, Mook, go ahead. I'll see you in a minute, my nigga.
I love you, man.
Love you too, bro.
All right.
Who's this?
That's my homeboy Chucky, the one I've been telling you about. I got some very important shit for my man, Fresh.
Statement about Europe is the United States open, and that statement is fear, and that means strong Swiss franc.
Crude up to 104.40 on Brent, up 7.8%. WTI just short of 100, breached that level a few hours ago at 99, let's call it 20, up 7.7%. Elise, I want to go to the investment bank side of JP Morgan, forgive me. This was their quote. Just assuming Russian escalation, we've got that, is coupled with an Iranian deal, we might get that. The team goes on to say we see the Brent oil price averaging 110 in 2Q22, 100 in 3Q, 90 in 4Q. You know the energy equities move here, Elise. Year to date, it's just been absolutely massive. Any reason to stick with it?
We think so. We have been talking about putting on energy exposure both through the commodity and the equities that are linked to the sector so far this year, and we continue to view that as a good place to hedge against some of these ongoing tensions and escalations. So absolutely an area that we're continuing to consider and talking to clients about putting on exposure in.
Futures down 2.5%, at least from the NASDAQ. Bear market around the open and bow. That's what we're poised for.
It's right now a really dramatic scene in markets, and people are looking at the idea of higher oil prices and, frankly, the potential for a stagflationary bend impeding the economic growth. One thing that we don't hear, though, in commentary, I got to say, John, that I find interesting, if the Fed becomes more dovish, if the ECB becomes more dovish, no one is saying that is a reason to then buy. We're not seeing this as a reason to become more bullish, just recognizing some of the potential threats to economic growth.
Because they're dovish for the wrong reasons. The move you're seeing in real yields today is not supportive of the market. Real yields lower, break-evens higher. When a central bank has to be dovish for the wrong reasons, that's not an environment, Lisa, you want to get long in.
Which is the reason why there's such a lack of conviction right now, and there's a lot of moves all over the place. But again, to talk about the yield curve flattening, which typically is a predecessor to a recession, being driven by the long end, by being driven by a bite being taken out of longer-term growth, says volumes about where we are right now in this moment.
And that's why inflation has changed the game. When we say dovish, we mean a pause. We don't mean easing. They can't ease this time around because they're already at zero and inflation's north of 7, Lisa, on CPI.
This has been one of the big risks, is that because the Fed is already so low, because the ECB is already so low, what further can they do if there is an economic disruption from an exogenous shock just like this?
That's the additional risk here as we see the open and bell in New York City. Futures are lower 2.6%. In the bond market, yields are lower by 10, 11 basis points to 188.71 on a 10-year. In FX, euro dollar 111.51. Just these big moves, Tom, we're seeing in foreign exchange. I mentioned those euro currency pairs. Euro dollar negative 1.4%.
On this historic day on Bloomberg Radio, John, you see this every day on Bloomberg Television, but the loneliness of those exchanges on opening, the lack of celebration,
Tom,
really speaks of this moment.
The clapping
is
very absent. It's almost embarrassing, I think, to clap around the open and bow this morning with equities down and down hard. At the moment, as we open up, Tom, about 50 seconds in, here's the state of play on the S&P, down by 2.5%, on the NASDAQ, down by 3.27. TK, you can run through the year-to-date figures. I can tell you where we were year-to-date coming into today. The S&P was already down 11%. The NASDAQ was already down 17. That's intraday. Coming into today, Tom, they were the numbers, down 11, down 17. Add it all up, it's brutal.
Again, I go to the Haven indicators. In gold, 19.54 the ounce, 2.4%, certainly distance away. John, I really want to say we're seeing extraordinary news flow across what Bloomberg does best, which is the aggregation of global headlines. We're being scrupulous about who we attribute to, John, but there are distressing hints, if I can, out of the 3 or 4 fronts of Ukraine under battle.
The NASDAQ entering a bear market. Let's get to Kaylee Lines for some movers. Hey, Kaylee.
Hey, John. Well, broadly, it is a down day for this equity market. There are a few pockets, though, of strength, and that is tied to really moves in underlying commodities, and that's translating into some energy and material stocks. Oil movers, for example, moving higher with the moves we are seeing in crude. The likes of Chevron up about 0.5%, though that is off pre-market highs, and you're even seeing the likes of Devon Energy now getting caught up in the selling pressure. You're seeing also, as well, gains for some mining-related stocks like Newmont Energy, and then defense also catching a bid here. Lockheed Martin is up 2.25%. But there are a lot more baskets of stocks that are feeling that downward pressure on the back of these geopolitical tensions, guys. Tech, of course, bearing the brunt of this sell-off. Apple is lower by around 4%. Nvidia is as well. And then you also are seeing pressure across the travel complex, across the banks complex as well, as we're seeing yields coming in. JP Morgan shares taking it on the chin, down about 4%. Carnival is down 6.4%. But really what is leading the losses is tech. You mentioned it, John, the NASDAQ 100 entering a bear market, now down more than 20% from its peak last year. Tech, of course, already weighed on by what has been perceived to be a higher rates, higher yield story, calling into question some of those richer valuations. Now you layer on top of that the broader de-risking we are seeing on the back of geopolitics today, and it paints a very, very ugly picture, John.
Kelly, thank you. Intraday, we're down more than 2% on the S&P. On the NASDAQ, down by 2.5%. Equities lower, Tom, year to date. Bear market for the NASDAQ now from the previous high at the latter end of last year. Year to date, down by, 18 percentage points? What a gap lower we've had, Tom, but the story's evolved. The reason for the move lower at the start of the year, the move lower this morning is different, Tom. The character of the sell-off has shifted too.
Yes, the character to me, John, is the absolute critical thing, and that, yes, we're down, and we can talk bear market and measurement. I want to remind people a bit younger that a bear market after the 18% is usually perceived as 30 to 35% down. I'm not inflammatory. I'm just saying that's what happens when you really go. What's missing this morning, John, in this historic moment is this idea of catharsis. I don't see any catharsis on the Bloomberg screen.
Lisa, when we talk about the character of the sell-off at the start of the year, real yields higher, nominal yields higher. We did some massive work at the front end of the yield curve. This morning, flip it the other way. Real yields lower, break-evens out, and the Fed stuck between a rock and a hard place. What can they do about the environment we're in at the moment?
Which is the reason why tech sell-off is really strange, right? Because you would expect tech to actually do better, outperform as a safe haven. And this raises a question of whether we're seeing a sell what you can kind of environment, not necessarily what you want to. The sort of flooding into any sort of haven or just hoarding cash. You could see that in T-bills turning negative, the most negative going back to the beginning of the pandemic.
Just looking at the sector breakdown, financials, bottom of the pile around the open. We're down about 3 percentage points there on the S&P. The only standout in green, the only industry group advancing, I mean, you can guess it, energy, up by 0.4%. Mike Wilson, I want to come back to you and just work through some of this with you. Mike, you came into the year pretty bearish, to be fair, at 4,400. You're at the low end of all the forecasts on Wall Street. Mike, let's talk about this. What would make you bullish? What would you need to see here?
Well, it's price, and we're getting there, right? So, I mean, the reason we weren't bullish is there was no upside, and there was downside to targets. So, we're pretty disciplined, as you know, John. We don't get too emotional around things. And so if we got to 3,800, we always thought we'd overshoot to the downside of, 4,000 was the minimum downside. We'd start to get interested. 3,800, okay, fine. But I think we could overshoot that if, in fact, this, accelerates the ICE scenario into something that feels more recessionary for a couple of quarters, at least from an earnings standpoint. We'll see how that plays out. So it's price, number one. But what I really want to see is I just want to see expectations get more realistic on margins and some of the growth from consumption that we think is now already starting to play out. We're hearing it from some companies, and that was long before this, event that's happening today occurred. Okay, that was already in process. So let's just get those expectations down, or let's get price down, or let's get both down, and then we'll probably step in. Well, price is down now, 41.27. Mike, when you do the homework and you come up with 3,800, can you just run us through it briefly? Where does that number come from? What's special about the 3,800 mark? So there's a lot of technical support there, number one, which is what you got to do in these types of situations when you're in sort of we're in a bear market, as Tom said. We've been in a bear market, though, for 6 months. It's just people now are waking up to it. I mean, the average stock was getting crushed last year, as you know. So here we are. We're having the finishing move. So we're just watching the technicals. 3,800 looks pretty good in that regard. Secondarily, from a valuation perspective, we've always said 18 times is the right number. 18 times 225, which is, year end, that's 40-50. And a little overshoot, call it 17 times wouldn't be out of the question. And if numbers come down sort of to 215 on this growth scare, that gets you to 3,800. So there's fundamental support, there's technical support. That's where the number comes from. In the meantime, people are trying to parse through what type of supply chain disruptions there could possibly be. I was talking about what's the rationale behind selling tech, and Elise, Gina Martin-Adams of Bloomberg Intelligence came out and said, actually, this is the surprise victim of a Ukrainian invasion by Russia, the idea that Russia is cutting off some of the supplies from key areas that feature in some of the supply chains. How much are you looking at this type of granularity when deciding how to move next?
We're looking looking into the granularity, but I think it's kind of an oversight of what's going on behind the surface of everything with Russia and Ukraine. To us, the year-to-date sell-off in tech has largely been driven by the Fed's, aggressive shift towards policy tightening. Obviously, that picture has become a little bit more muddled for all of the reasons that we've been discussing for the past few minutes. But if and when we would see any sort of rebound rally in tech, we would be keen on rotating some of those exposures into more defensive segments of the market. And that has more to do on our outlook that this economic cycle is progressing. And although we think the expansion will continue, we do want to start repositioning portfolios to kind of get away from that rising tide lifts all boats, speculative sort of benefits environment, and more towards, well-insulated portfolios that can navigate a maturing cycle.
Just getting a headline, Tom. 3 p.m., the ECB's President Lagarde, EU officials to hold a press conference at 3 p.m.
3 p.m.
Put that one in the diary. President Lagarde of the ECB and EU officials to hold a press conference.
John, is that 3 p.m. our time?
Trying to work that out, Tom, if that's 3 p.m. local or not. I'll get the team to work that out quickly, but certainly in the next few hours, we're going to hear from the ECB president.
Well, there it is in comments on the central bank, and of course, they're observing markets moving here as well. John, with these esteemed guests, I want to go to a brilliant essay, no surprise, from Michael Purvis of Tallbacken, where he channels the game theory that Dr. El-Arian is so famous for, the moments of T decisions that can be made, and going back to Frank Knight in the strange word uncertainty on unknown unknowns. And that's really what we're talking about here into this afternoon of politics and the markets and trying to reset to our good guest world is what are those unknown unknowns right now.
And the psychology of the moment too. And Eric, I'd love your thoughts on that. This is a really difficult moment, trying to work out how this settles. Hopefully settles down soon too. And what it means for a market, what it means for policy. Eric, everyone wants to buy the dip, and then we get one. They want to buy the correction, and then we get one. And you start to conflate it with even scarier things on the horizon. Maybe this is the one. This is the one where we get this monster correction in tech stocks and we don't recover for 10 years. Eric, how do you divide the emotion of the moment with just the fundamentals, to focus on where we are and what the price of those fundamentals are?
I think that it's important at this point to step back and ask the basic question: does this shock to the system meaningfully increase the risk of recession in the next 12 to 18 months? If the answer is yes, then there's look out below, right? Then that would generally lead to a true full-on bear market. If the answer is no, this is merely creating a more challenging growth inflation mix, then you can start doing the kind of math that Mike just took us through and find entry points for owning equities, assuming reasonable earnings growth, assuming reasonable valuations, and in fact, certain aspects of the market environment have just gotten more attractive for equities. Real yields have gone from negative 40 to 45 to 55 basis points to negative 85 basis points. That's generally correlated with more higher valuations in equities. When you talk about uncertainty, one thing that we would be doing or looking at right now or speaking with our institutional clients and clients more broadly about is taking advantage of this environment by owning volatility. If you want to own some more equity at this point, do it by selling puts on an equity index with VIX at 37 rather than VIX at 20 or VIX at 15. Manages your downside risk, you're capturing very attractive premium and gaining some additional equity exposure on the margin.
Elise, can I give you the final word on what you're looking for through the rest of today?
Sure. We're obviously expecting more volatility from here, but very much encouraging investors to stay the course, stay invested, focus on the longer term fundamentals, and, kind of acknowledge that geopolitical events like these don't actually tend to have lasting impacts on equity markets, particularly in the United States.
Elise Ossenbach alongside Eric Knudsen and to Mike Wilson, to the three of you, thank you so much as we work through a difficult time worldwide and particularly, of course, especially for the people of Ukraine. Equities down by more than 2% on the S&P, on the Nasdaq, Tom, down by more than 2%. This has been a tough time. That's the story for equities. Let's look at the story for commodities as well. To work through Brent and for WTI, Tom, Brent crude.
Cole, you stupid.
Whoa, don't make me wait too long. Fire like a shot, I'm way too on. Time ticking, I'ma bring my phone. Pussy perfect, girl, you can't do wrong. But don't make me wait too long. Slide on your favorite song. Let me find out you faded loaded. I pull up, but I can't stay too long.
Fly shit, yeah. Look, I ain't got all day, baby. Money to make, and I've been trying to get paid. I got hoes and they feelings grown. Women sentimental, couple foreign things flying in and out of LA. I'm not a player, I got a plan. What's up with you, girl? What you saying? Do you wanna roll with a nigga from the land? Let me see you pose for a minute. 5'5", thick thighs busting out of the denim. Goddamn, ass fat, way more than a little bit. Probably had me falling in love if a nigga hit. Never had a nigga from the hood, but she into it. Baby said she wanna go slow.
Don't make me wait too long. Fire like a shot, I'm way too on. Time ticking, I'ma bring my phone. Pussy perfect, girl, you can't do wrong. But don't make me wait too long. Slide on your favorite song. Let me find out you faded loaded. I pull up, but I can't stay too long. 'Cause I'm too impatient, I just can't take my time. Don't make me wait in line. If you treat me basic, I find replacement. I keep it player all time. Don't make me wait too long. Oh, don't make me wait too long. Yeah, you know, yeah, you know, yeah, you know.
Hey, the clock ticking, the plot thickens, I'm not tripping. I got bitches, you got niggas, we not different. Feel me? I got hoes, but not really. Wonder where the time goes when you're not with me. Yeah, you top 10, we should lock in, hop in. Baby, let me show you that I'm not playing. You probably used to weird niggas, I am not them. Watch this, press one button, now she topless. Take one flight, hit the tropics. Take your whole life, make you my bitch. Make you fall in love with this bullshit. She said not yet.
Don't make me wait too long. Fire like a shot, I'm way too.
We really need to start watching right now as we are entering the afternoon in Europe is margin calls this afternoon, this evening here for the commodity markets. We have huge price increases across the whole commodities complex. It's not just gas or oil or aluminium or wheat, it's everything at the same time and something that we have not seen before moving simultaneously at this rate. The size of the margin calls tonight are going to put a lot of stress on some of the big trading houses. I think, and I have spoken to some of them, they were prepared for this, they were stress testing, but some medium and smaller players may have trouble with the size of the margin calls that is coming.
Javier, wonderful as always, buddy. Good to catch up. Javier Blas there out of London. We'll be catching up with JP Morgan's Christian Malik a little bit later this morning. We'll do that in the next hour. That man has a big call in the crude market. I wonder if it just got even bigger. I want to turn to Maria Tadeo out of Brussels. Maria, just to touch base with you, just got a headline moments ago that we'll hear from Lagarde and EU officials in a news conference. Any idea when we're going to hear from them?
Look, I think it depends on how long this meeting goes, but if you look at the reason why she's doing this today, let me just give you one stat. If we do get big sanctions on Russia, for every dollar the United States is going to lose on this, the Europeans stand to lose 10. So this gives you an idea of the impact that this could have on the European economy. As you know, there was a meeting coming up in March. The market was assuming this was the end of EC money, QE pandemic program. A lot of people would now tell you, well, maybe it's time for the ECB to look at this differently. And there will be a real question about the implications that this will have for inflation. Remember, if Russians do go through and follow through this idea of, well, if you don't back Putin, we're going to make you pay very expensive for energy, then that is going to feed directly into the inflation picture in Europe. So a lot of this has to do with coordination between the central bank and the politics. We also know that behind the scenes, European officials on the political front are meeting too as we speak, and they're keeping a very close eye on the situation, particularly around the Ukrainian capital, around Kyiv. They're very worried about whether or not Russian troops could potentially take over the city in the next few hours. We're talking about hours now.
Yeah, Maria, thank you. And actually just getting some clarification, a correction. We're all following the headlines here. The ECB's Lagarde and EU officials will hold a press conference tomorrow. Not later, Lisa, tomorrow.
And this does matter because there is an issue of whether central bankers are going to be formulating some sort of emergency response or whether they're just going to keep an eye on this, and it indicates more of the latter than the former. I just want to go back, though, to something that Javier Blas said, and just sort of to reset this idea of margin calls, this idea of fallout that could go far beyond what we're seeing right now in such violent moves, particularly as supply chains get disrupted and the expectations for more, as Russia does increase its escalation in its invasion with Ukraine.
Things are moving fast, Tom. Just trying to keep up. We all are.
We are, with the Dow negative 814. For John Farrow, I quote SPX here, negative 88 on that, 2.1% down on Standard & Poor's 500. The VIX out 6 big figures, now out only 4 big figures, but a true churn to the market, and critically, Euro Swissy breaching 102 moments ago. Strong Swiss franc. It is time to recalibrate across politics and economics. We can do that looking at the markets as well with Michael Darda of MKM Partners. Michael, you and I have gone back over the years as students of history. This is a regime change as we all breathlessly see the speed of movement of Russian, or indeed I could almost say Soviet forces. Fine. Of this regime change, how permanent is it?
Well, Tom, we've got a lot of uncertainty in that regard at the moment. Obviously, markets do not like disruptions to commerce, and sanctions and wars are presenting exactly that. So, we've had a sell-off here that intensified. But quite frankly, if I could send a message to the retail investors that are out there listening that might be on the verge of panicking, you really do not want to be selling into weakness. I think it's very easy to open up the portfolio and see what's happened to the markets year to date, and it's intensifying, and all the headlines are negative. But I would just simply recommend to the retail investor to try to buck the trend here a bit. And if you haven't sold into this, this is not the day or the moment to be selling. In fact, just the reverse if someone has a long enough horizon and the appropriate risk tolerance.
Michael, you and I have always talked of the acclaimed work of Roger Ibbotson and that famous S&P chart he made that goes way back past the Depression as well. In World War II, Guadalcanal was for me the low in 1942, what I call the Guadalcanal low. Except nobody knew about Guadalcanal because of the secrecy of the Pacific battles. Now we are dealing in real-time social media, Twitter showing us helicopters moving south to Kyiv. How do investors deal with the immediacy of the information of this modern day?
Lately, I'm feeling like part of me is drifting away. I'm drifting away from what I wanna be. It hurts me every time I see your name on shining lights. You say I'm not worth the wait. I've got nothing left to show. All of me is what you know, not as good as I've been told. You said you found me, but I'm lost in every word you said. I'm not. You're being honest with your thoughts. Yeah, you hated everything I loved the most.
Year, but now we're down more than 10%. This would be the time, and to be patient. A lot of uncertainty, but what's happening in Ukraine is likely not going to be pushing the U.S. economy or the global economy into recession.
Michael, you're talking about how much strength there is in the U.S. economy, how you expect the Fed to stay the course. If they don't, if they buy into the same narrative that markets are right now, of perhaps moving away from some of the rate hikes this year, do you think that that would be a policy error?
Big time. Big time. So, let's just break down what happened in credit markets this morning. If we look at the 5-year horizon on the yield curve, real rates dropped by about 25 basis points, but inflation expectations rose by exactly the same proportion. All right. So what does that actually mean for the neutral interest rate? It essentially means it's a wash, right? And the starting point coming into the year was the Fed way behind where it was even in the last cycle without a big inflation overshoot. So the Fed's policy rate with 5-year expected inflation above 300 basis points is 250 basis points below where it was in late 2017 when the labor market had recovered to current levels of utilization. So I think there's a risk here if the Fed's going to slow it down. I don't think they'll skip the March hike unless something really crazy happens in the intervening weeks. But the risk would be that we're kind of baking in a behind-the-curve inflationary Fed stance into the cage.
Mike, thanks for being with us, sir. Mike Dowler, just wonderful, as always, buddy. If you're just tuning in, equities are lower by 1.7% on the S&P, on the Nasdaq by 1.3% off session lows. Overnight, as you know, Russia invading Ukraine. And as the morning progressed, we started to get a deeper suggestion, a bigger suggestion that they were heading towards the capital. All headlines point to that direction at the moment, Tom. Starting to get an understanding of what's happening right now between G7 leaders, including the United States. There was a meeting on Ukraine which started at 9:17 DC time. Biden, G7 leaders discussing the response to Russia on Ukraine. Seemingly here, Tom, they all want to stay on the same page, keep the same script, and come up with the same reaction, the same response. The effort here, of course, is incredibly difficult. The objective, of course, is to cripple Russia. They've been very clear about that, Tom. Can they do that without crippling Europe? That's the challenge for leaders with those talks ongoing.
And I would emphasize the silence here. Sometimes, folks, it's not the news that you see in the headlines coming out of the White House. Anne Marie Horton is 1600 Pennsylvania Avenue. To me, John, what is so important here is the headlines we're not seeing. We're really not seeing news flow from the 3 or 4 ports of the Black Sea where the Russians are attacking. Reports of Mariupol, clear reports of Odessa. There's no question about that. It's the headlines, John, that we're not seeing into the Ukrainian early evening that are so important.
And the headlines we're waiting for, Lisa, the response of European and U.S. leadership.
You know, they're crafting the response. That's what we're hearing from the G7 meetings. How much has already been pre-crafted, right? I mean, they've been talking, they've been meeting for the weeks leading up to this. How much they have to reshift because of the speed. And we've been talking about this all morning, John, the speed of the invasion in Ukraine.
Well, the speed of the energy move, too. I mean, Tom, look at this headline. Benchmark European nat gas prices rise as much as 50%. That's intraday. That's not year-to-date, Tom. That's intraday.
It's intraday, and let's be clear here. This is into the afternoon and early evening across those time zones. And, John, I would really suggest the news flow in the coming 3-4 hours will set the tone for a second market adjustment, maybe at, say, 12 noon our time.
Got to set the tone for the Fed speak, too, the ECB speakers.
How do they speak today? I mean
this is the lineup.
You rip up the script, and it's not a time for a joke.
Speeches, Q&A on the fly. Lisa Bostic, Mester Daly, Waller, all lined up through this afternoon.
How do they give guidance at a time of such incredible uncertainty? Do they talk about taking a step back, or do they say we're going to go ahead and then wait? What are they looking for to determine the economic ramifications of this, especially as we see the ongoing jobless claims fall to the lowest levels going back to 1970 in the United States?
The ECB's got to be in a tougher place here, Tom. I think this is so hard for the ECB. With energy prices doing what they're doing, growth already soft in Germany for Q4. You saw the Germans scared of what would happen in Q1. Some real weakness up front in the first month of Q1. Where does that leave the ECB?
Well, we're going to hear from Lagarde. John, to be clear, there was a correction to the headline for those like me confused.
Tomorrow.
We were looking for a headline today, but it's tomorrow, right?
Press conference, 3 p.m. Brussels time, as I understand it, after talking to the team.
I'm going to bring this up, John, without attribution. I've got to be very careful here. It's out in the Twitter sphere. But like the German team taking the Gazprom tag off the uniform, some reports of Russian troops entering the Chernobyl region. That speaks of a time long ago.
We'll stay on top of the headlines, Tom. More still to come with the Bloomberg Surveillance team, with Tom Keene, Lisa Abramowitz and Jonathan Ferro with you through the next 2 hours with equities down off the lows, but down 1.6%. This is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
It is President Putin who is bringing war back to Europe.
This is a deliberate, cold-blooded, and long-planned invasion.
The United States, together with our allies, will defend every inch of NATO territory.
Today, in concert with our allies, we will agree a massive package of economic sanctions.
Russia leadership will face unprecedented isolation.
This is an extended edition of Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide on TV and radio, this is Bloomberg Surveillance. Good morning to you. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. TK, about 30 minutes into this session, we're down 1.5%. Just words you do not want to wake up to, Tom. War in Europe.
There was a headline, Russia invades Ukraine, and it was more than an invasion. It is a multi-front invasion, and the news flow extremely supple right now. As I mentioned moments ago, John, and I know we go to Henry in Moscow, what is important to me now are the headlines that are not being written. There is a silence across much of the geography of Ukraine.
And a silence on leadership in the G7, EU members, Tom, the President of the United States, because right now they're in a meeting. We wait for their response.
We have lots of internal memos, and we had one in Washington that said to me there were 2 camps at the White House. There's no time for camps in any of this diplomacy and reaction, John. There needs to be singular action, and you wonder, will there be that, and will it be coordinated?
Lisa, the dark words of the Russian president earlier today, vowing to, quote, demilitarize the country and replace its leaders.
And right now we're hearing reports of heavy fighting in several different places. We're hearing of military bases being targeted in Ukraine by Russian Air Force, as well as ground troops. We're talking and hearing about people hiding out in Kiev, in the capital, as they hunker down for what feels like something that's just getting started.
And we're hearing from senators as well, Lisa. Senator Manchin, in the last hour or so, the U.S. must impose, quote, crippling sanctions on Russia. And we've all been talking about this, not for the last couple of days, for weeks, for months, for years. If this kind of thing ever happened, can you impose crippling sanctions on Russia without crippling Europe?
And right now, given the fact that you're seeing natural gas prices surge 50, 60% on an intraday basis, how much is their hand called by what the actual consumers are doing? And what you've said is absolutely right on. The ECB has a much more difficult job right now than the Federal Reserve, because that economy is a lot more vulnerable and frankly, on both fronts, because it hasn't responded and rebounded in the same way that the U.S. economy has.
Let's whip through this price action briefly. About 30 minutes into this session, we are off lows. We're down by 1.9%. 0.5% on the S&P, still down by 1.6% on the NASDAQ. There is a bid in the bond market, but yields are off the lows too, down about 9 basis points, Tom, to 189.92. Crude, that move backs away as well, Tom. That was through 100 early this morning, 97.34. Brent crude nicely through 100 early this morning. But, Tom, we just back away a little bit from the bigger moves we saw early this morning.
No question about it. Across the haven pairs that I look at, including Euro, Swissy, and gold, you're absolutely right, John. We move back a little bit, but I would suggest we move back a little bit, waiting for the immediate news, certainly the White House front and center.
Well, Tom, we have a time, 12:30 in Washington, the President of the United States to speak about Russia and Ukraine.
How do you do, John? How do you do partial sanctions today? Explain to me a tranche.
I don't think they're going to be talking about the first tranche. Lisa, I think it's fair to say the language of the British Prime Minister Boris Johnson, tranche 1, the language of the American President Joe Biden, tranche 1. I don't think we're going to hear about the first tranche, a second or a third. This is it, isn't it?
They have to lay their cards on the table, which is probably why it's a complicated discussion, because they have to lay it all out there and figure out how far they're willing to go with a Vladimir Putin that perhaps they underestimated in terms of how quickly he would move into Ukraine.
Let's get to team coverage. We can start in Moscow and we can get to Bloomberg's Henry Meyer. Henry, you've seen the reports, the march towards the capital. Henry, that's a real escalation. Your read on things at the moment from your perspective, from where you're sitting.
Right. I mean, what we've seen today is a kind of campaign of shock and awe. The Russians, unleashed a barrage of missiles, air attacks, and artillery, which aimed to cripple the Ukrainian air defense installations and command and control centers. And then you saw, ground troops moving in from several different directions. And as of early afternoon, there were already attempts by the Russians to take a key airfield near the capital. So it doesn't appear likely that the Russians will actually try to move into the cities at this stage, but they may encircle them.
Henry, the idea here of Mr. Putin, and as you say, with great respect for your years in Moscow, the Russians. It's just about Mr. Putin. The Guardian a few days ago mentions his reign. Explain to our global audience in this time of crisis how small the circle is around Vladimir Putin.
Well, he has become increasingly isolated, particularly since the pandemic started 2 years ago. He was, for health reasons, was not allowing people to see him. Therefore, he has become very reliant on a small entourage of security hawks. And this was very interesting earlier this week when he held a Security Council meeting, which paved the way to his invasion. You saw that these were the people. He is relying on the heads of the intelligence agencies, the military people. That's the advice he's getting.
Henry, Angela Stent talks about the near abroad. I think we all understand that Ukraine, and certainly eastern Ukraine, out past Kyiv, is the near abroad. If Russian troops move west, somewhere in the vicinity of Poland, does Poland suddenly become the near abroad?
I think, honestly, that this is about Ukraine. I don't think we're going to see anything beyond that. But this has been something that for years Putin has been concerned about. This 2014 we saw those events, and I don't think anyone could have imagined it would reach the point it has today, but it has.
Henry, we're hearing a lot about people leaving Ukraine, trying to flee, and the surrounding nations preparing for refugees. In Russia, are there any people who are planning to leave ahead of some of the sanctions and the isolation of that nation?
I'm sure people are thinking about that very seriously. I mean, there's certainly a sense of panic among certain people that they're braced for what's ready to come, and frankly disbelief. I don't think people have quite come to grips with this new reality. It's like they're woken up in a different country.
At what point does that factor into Vladimir Putin's thinking? A lot of people, particularly in the West, were feeling like they're really not negotiating with a reliable actor in any way. How about the rank and file of Russians? Do they still think that this is the West, or are they looking inward and trying to figure out the leadership?
I do think that there's a very serious threat to Putin's position, especially if this operation starts to go wrong. If you have high civilian casualties, definitely Russian people consider Ukrainians as a friendly, a brotherly nation. That hasn't changed. So I do think that he's taking a huge risk.
Henry, we have to leave it there. Stay safe, sir. Wow. It's good to catch up with you. We appreciate it. Henry Meyer there of Bloomberg. As that headline crosses the Bloomberg, Tom, just moments ago, that President Biden will speak about Russia, Ukraine at 12:30 Eastern Time down in D.C.
And what he knows, and our authorities know, including General Austin at the Pentagon, John, is the military efforts are moving. We're very scrupulous on surveillance, and particularly with this special coverage, folks, to be very careful about the videos that we see in the modern social media and all that. John, let me editorialize. The social media out of Ukraine is grim.
Well, let's not go there, Tom. It's already dark enough, isn't it? And it's incredibly personal for the people of Ukraine. Can we change the behavior of the Russian president? You've heard the words from Ian Bremmer this morning, Tom. Unlikely.
Yeah, it's just simple. I mean, Dr. Bremmer weighs in, as do others, waiting to see the level of sanctions as well. John, why don't you bring in an Anne-Marie Horton? She's had an exceptionally busy day. She's been sending me her sourcing in Washington. It's complex.
Well, AMH, let's start here. We hear from the president at 12:30. Over the last hour, he's been on the phone with allies. They've been so well scripted. Every single term, US intelligence has been on top of this. They've made everything very public. And every single turn, the Russian has basically followed up with every single step the US expected. So now walk me through what we can expect on the sanctions side of things. Are we still on the same page? And is this it? Is this the trigger for the big one from the United States, from NATO members?
So let's just be clear. We just don't know yet, right? We know potentials that can happen, but we don't know what the full-fledged package is going to be like because the U.S. has floated a number of things and actions and penalties they can take against Russia to try to deter Putin when they were releasing all of that intelligence. Two things we should note potentially. One, the other day when they went after two Russian banks that are very close.
What's up, guys? Sorry for being on so late. I had a little bit of a technical issue with the setting up the camera this morning. Basically, markets did exactly what we thought they were going to do. They gapped lower today. We had a down open today. But what happens is that, like I said, we're beyond support. So we're in a very complicated, difficult area, a very determining area. This area will either determine it all. Today will determine it all. Are we gonna continue to fall? Are we gonna continue to see the downtrend, or are we gonna push slightly higher? And even then, it's not decisive. Why? Because now what was support now becomes resistance. So this point right here, that was our support, our buy support yesterday, now has become resistant point. So around 420. Stock can rise up all the way to 420, consolidate here, and then this will honestly be the real point where we see the trend change or not, where we can determine, okay, this is going to happen, this is not going to happen, this is where we're headed, this is where we're not headed. So for whatever reason, today, right now, it has found support. It's trying to push back up, but as you can see, it's really only about a $5 move higher that we could possibly make. For instance, today has dropped almost more than $10 overnight. So I don't want to get into this just yet. I don't want to go crazy and start buying a bunch of calls and all that. One, because of the VIX. The VIX is extremely overpriced. What does this mean? That means that the option prices are also overpriced. The strikes are far from each other. They're nowhere near each other. And then when you do have any type of move, since the market knows that there's going to be, above average movement, it prices that into the options, therefore making them extremely, extremely overvalued. So a 1% move that used to give you 100% is now going to take 3% or even 4% to give you that same 100% return back on your capital. Even gold had a huge rally up higher today. Like I told you guys, and silver did so too. For whatever reason, my contracts didn't sell. Maybe I didn't have an order. Let me see if I didn't have an order. Fucking pissed. I mean, right now, as is, they're giving me above a 90% return, and it has sold out. So that means that, yeah, I didn't have a sell order on this. Oh, fuck me. 18, we could do 0.0. That was stupid of me, man. Easy money. Yeah, they already gave above 200%. Today you could have woken up with probably, if I would have had a limit order on this, it would have probably been a 300 or 400% gap up. Extremely profitable day, just on this one. And they're still valuing, you know. Just set a limit order there, just in case markets do continue to sell off. This will then push back higher and then sell my contracts. Like I said, a lot of things are at support right now. You could ideally buy into a lot of these stocks and profit off of them, make a lot of money. But the thing is that there's so much volatility that it'll make everything hard, because now there's no trend. Now it's fear, panic, greed, whatever you want to blame it on. You know, people, now it's really, it's going to be a, how can I explain this? It's like a indecisive movement. I don't know if that makes sense. Because you think that it's going to head one way today and it'll show you this huge reversal. You think, oh my God, we're about to blow up, da 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 da, this whole thing. Tomorrow it gaps down 10%, gaps down 15%, some ridiculous stuff. You're like, oh, what happened? Well, people got hit with margin calls today. People were scared. Motherfuckers woke up today and saw their account down 20%, 30%. They decided to sell. That's what happened. So you can never be too sure. Right now, even though everything is pushing back strong, it looks like everything is at a good support area. And everything, we don't want to jump the gun. We don't want to make any decisions that would then blow up our account, So we're gonna keep on looking at this, give it some more time, listen to the news, see what they are, what they're saying, and we'll be back around 10:50 for a final recap of the morning trading, and then we'll decide then if there's any entries that we're willing to take and take that gamble today. Peace. Sure.
Though on its head, even with the valuation story, just simply because the risk is that much higher in that region.
Well, certainly Europe is much more exposed, both economically and, of course, in terms of proximity. But I don't think it really changes the fundamental underlying issues. First of all, the European economy is actually pretty robust at the moment, much different to the situation, say, after the financial crisis. To your point, the policy cycle is less aggressive in Europe. In fact, fiscal policy is still easing. Interest rates are likely, at least in the Eurozone, to be rising at a much slower pace. And we've got strong private sector balance sheets in Europe. We have more exposure to value, to energy stocks, and to other areas of the market that investors have been tilting towards. And we should also recognise that valuations are reasonably good. I mean, if you take the Stock 600, for example, it's trading on a P of about 14 times now, having peaked at around 18. much cheaper than the US and pretty much in line with its long-run average. So in the short term, of course, uncertainty is going to be a big drag to this market, but fundamentally, it looks reasonably sound, and we do remain actually overweight on a one-year view.
Peter, in your geography at the London School of Economics, which, folks, is world-class, even long ago and far away when Mr. Oppenheimer darkened the door, there's an idea of the European experiment. It is under threat today, Peter, as you and I have never seen, even with the collapse in '91. Frame for us this moment and how Europe must adapt. Which institution do you look for, or does Goldman Sachs look for, to provide a new stability for Europe?
Well, it's a great question, but we should emphasize that the institutional framework across Europe has strengthened dramatically since the days of the financial crisis and the sovereign debt crisis. Obviously, we've had a ramp up in the available instruments that can be used on a Europe-wide basis to deal with any systemic shocks. And that's a significant positive. And we should note that, for example, while sovereign spreads have widened a little bit in places like Italy, it's been very modest relative to what we've seen in previous periods where there've been heightened uncertainty. And I would say that from that perspective, things are looking a lot more robust. That being said, one of the critical issues for Europe, of course, is energy security. Europe has been ahead globally in terms of its focus on decarbonisation and ramping up investment in things like renewables. And I think this adds a new degree of urgency to that programme because that's what Europe is going to have to really agree on in order to become more independent in terms of its sources of energy.
And Peter, great to catch up with you, sir. As always, a difficult moment for the continent and for the people of Ukraine. Thank you. Peter Oppenheimer at Goldman. Story in the equity market is we're off the lows. We're off the lows at the moment on the S&P. We're down by a little more than 1%. On the Nasdaq, we're only down 0.5%. Still a lot of pain in Europe. The DAX is down by 3 or 4 percentage points. But we're getting some ECB speak as well. And it's not just the line, Lisa. It's the individual with the line.
Yes.
It's Governor Holzman who says the Ukraine conflict may delay the stimulus exit, and that is one of the most hawkish members of the Governing Council, suggesting that is an important headline from the ECB.
Earlier this week, he was out with some pretty hawkish proclamations about exiting more quickly. What he said more specific in an interview with Bloomberg News is it's clear that we're moving toward normalizing monetary policy. It's possible, however, that the speed may now be somewhat delayed. How much do we get this reiterated by others? But yes, he is one of the most hawkish members. The fact that he is coming out with this is really quite notable in terms of a sentiment shift.
And if you just quickly pull up a chart, Tom, of the Italian 10-year off the back of that headline, that yield just shot lower. The Italian 10-year yield now down by 12 basis points on the day, down 12 basis points. A lot of that, Tom, coming after that headline from an ECB Governing Council member.
Well, you see the market react, folks. We see that across what's called Bloomberg Launchpad, and it's a red and green maze of data. Lisa's is different from John's, is different from mine, but everything just fired right up. My benchmark measurement of this, folks, is the Standard & Poor's volatility. The VIX 37-ish, and through the morning, we're now down to 34.29. What we're trying to do here, and we welcome all of you on radio and television to Bloomberg Surveillance on this historic day. We will be with you to 12 noon. David Weston scheduled to bring you the President of the United States in the 12 o'clock hour. And on radio and television, what I would suggest is we have a team behind us this morning killing themselves in London and New York to bring you the best voices. We welcome Christian Malik, head of EMA Energy Equity Research at J.P. Morgan and an exceptional student of the European continent and hydrocarbons. Christian, let me open with an inflammatory statement for you to react to. Can this be Riyadh to the rescue? Is this a moment where Riyadh can adjust hydrocarbon fears?
Well, when you think about, hey Tom, and thank you for the kind comments. I think when we think about OPEC's reaction function, we've got to think about what are they there for? They're there to step in if we see physical oil outages. In this context, we haven't seen oil outages, and therefore what we'd see them do effectively is manage a risk premium. But I'd remind you that when we saw this risk discount, I remember we had that first conversation back in November as oil prices were collapsing, OPEC didn't step in, Saudi didn't step in order to mute that decline because it was ultimately not linked to fundamental shifts in demand and or supply. Equally, while it's still early, we haven't seen any fundamental shift in supply, and therefore it's unlikely that we see OPEC respond, albeit that they will be looking very carefully at physical changes in supply and then responding, I think, as a result of that.
Christian, could we just get a gut check from you of how much your expectation for oil prices this year has changed as a result of this invasion of Ukraine?
I think when we highlighted the risk premium analysis back in November of oil prices potentially shooting to $125 this year and $150 next year, it was firmly on lack of spare capacity. And when I sort of link that to today and the last few weeks of events, when I think about the impact to that risk premium, I'd start with what has changed in terms of total spare capacity. You know, we have a very low number in our expectation, around 2.8 million. It's the lowest on the street. And when I think about the impact to that spare capacity, the question I'm asking is, well, will Russia's spare capacity be impacted? Now, potentially through financing and underwriting that spare capacity, we had Russia in the medium risk camp in terms of its ability to deliver production. Does it ever effectively move now into the high risk camp of delivering along the lines of Angola, Nigeria, and others? In which case, if it were to do that, that $30 risk premium is here to stay. It's not reversible. And that's regardless, Lisa, of whether we see a change in production from Russia. It's just they won't be able to deliver that spare capacity. They won't be able to live up to their quotas by virtue of not having the funding and the wells. In that context, we could see oil prices moving closer to $120 to $125 and stay there.
And stay there. How much does the Iranian deal potentially shift this equation back down to something that would be more comfortable, certainly for the United States and Europe?
Well, Iran would ultimately offer a relief valve in the context of being able to add additional barrels. But we are quite skeptical as to what Iran can offer at the moment, even if sanctions are removed. We wrote about this again in November, that they could only potentially deliver over and above 500,000 barrels because of the lack of investment. If Nigeria is having problems and Kuwait's having problems, how is Iran able to deliver the spare capacity in that context? And therefore, we'd expect Iran to have a sort of muted impact in the context of limited spare capacity. It would offer relief, but it wouldn't fundamentally change the risk reward in oil at this point.
Christian, let's extend this conversation, if you can. I'd love to catch up a little bit more and talk about the commodity and then talk about
TKO, Gator Boys crew. Nigga know what the fuck going on. Big Drakester.
Ayy, foot on that next, I be stomping on niggas. I ain't wearing no vest, I ain't ducking no niggas. I ain't running from triggers. I look down the breath, tell him bullets, and he think he really a killer. He ain't like that till he pop him a jigger. I see through these bitches like Snapchat filters. If I miss a target, must have been dreaming. I never miss a shot when I'm trying to sick him. Born with this ain't since I came out my mother. I'm CJ McCullum when they hit the buzzer. You can ask my brother how niggas turn into a gusher. When I up to Drake, then I bust him. My niggas say fuck him, so you know it's fuck him. I fucked him over, then fucked on his lumber. I did use a rubber. Got a feel when I cut her. Say she love when I slut her, but I never cuff her. Nigga, nope. Fly like Peter Pan, bitch, and all been a man. All black Batman, with my niggas ride band. Gun got a wingspan, lay him down like he on a beanbag. Shoot the whole crew, where's team man? Took him out the loop when I shoot in the coop with a deuce, let it loose. Extra dope mailman. Big up the cake, I seduce. Better duck like a goose when I'm at the roof, shoot like a madman. Say you caught a hat, where the body at? When you find that motherfucker, call me back. Fuel tips on my belt, I ain't proud of that. It was something telling me to double back. And I been had a body with big beating nose. Tell them free TiVo, this shit TKO, and you know how they go. Me and my brother, we murder on that next. I be stomping on niggas. I ain't wearing no vest, I ain't ducking no niggas. I ain't running from triggers. I live down the breath, tell him bullets since he think he really a killer. He ain't like that till he pop him a jigger. I see through these bitches like Snapchat filters. If I miss a target, must have been dreaming. I never miss a shot when I'm trying to sick him. Born with this ain't since I came out my mother. I'm CJ McCullum when they hit the buzzer. You can ask my brother how niggas turn into a gusher. When I up to Drake, then I bust him. My niggas say fuck him, so you know it's fuck him. I fucked him over, then fucked on his lover. I did use a rubber. Got a feel when I cut her. Say she love when I slut her, but I never cuff her. Never cuff her, never wife her. The only thing she get is pipe. Told her that we got a date today, but she getting dick tonight. No, it ain't right. She telling me she need me in her life, but I want her friend. Shiesty catching me without my pipe. Unlikely. Have you ever seen Mike without Ike? Turned it up a notch, now I been getting global bitches on my crotch. Overseas and local, take a seat and watch me never lose your focus. Told bro, despite me too much weight, I'm loaded. Which one you boys the boldest? Reef for this charm, you die while you posing. Reef for this chain, you die in that motion. Leave him stuck, hypnosis. Killed the pride he was holding. Yup. Living the life that these rappers be rapping about. Let's take a lot of tests to see who capping now. Graduated from the streets with a cap and gown. First degree on my body count. Hey, how many we pop, get a head count. Made bro recount, get the right amount. Last nigga, he ratted, he dead now. Put on that next, I be stomping on niggas. I ain't wearing no vest, I ain't ducking no niggas. I ain't running from triggers. I live down the breath, tell him bullets since he think he really a killer. He ain't like that till he pop him a jigger. I see through these bitches like Snapchat filters. If I miss a target, must have been dreaming. I never miss a shot when I'm trying to sick him. Born with this ain't since I came out my mother. I'm CJ McCullum when they hit the buzzer. You can ask my brother how niggas turn into a gusher. When I up to Drake, then I bust him. My niggas say fuck him, so you know it's fuck him. I fucked him over, then fucked on his lover. I did use a rubber. Got a feel when I cut her. Say she love when I slut her, but I never cuff her.
Could boost inflation in the euro area. And as for markets, they're betting on it, with commodity-focused hedge funds seeking to capitalize on the decarbonisation push. Breaking out China. China has been a synonym for emerging market investing, with Chinese companies making up around half of key stock indices. But could it become the new Japan? Bond and stock portfolio managers are looking to carve out China from their investments, seeking to make the most of idiosyncratic trends within the markets and the wide breadth of opportunities. This is Market Bites. I'm Libby Cherry, and for more content like this, follow us on your favorite platforms.
We have to be able to give our customers vehicles, that are their primary vehicles that are EVs, and to be able to do that, we need to have range and infrastructure, and we need to remove the pain points, and so that's what we're doing.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is an extended edition of Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equities look like this about an hour into the session. We back off away from session lows, still down 1% on the Nasdaq. The S&P down by 1.5. A turnaround to the European bond market. Italian 10-year yields lower, much lower, as a known hawk on the Governing Council backs away from the idea of tightening anytime soon. Euro dollar breaks down as well. The dollar index is stronger, up by 1.4%. The dollar index 97.51. President Zelensky on Twitter, Tom, of Ukraine. I'll read it out verbatim. Russian occupation forces are trying to seize Chernobyl. Our defenders are giving their lives so that the tragedy of 1986 will not be repeated. We've reported this to the Swedish leader. This is a declaration of war, Tom, against the whole of Europe. That language, let's be very careful with that last line, Tom. That language from the Ukrainian president just moments ago.
And this is a story in motion here as we go to the president now. In 2 hours, President Biden will be speaking. And again, we are getting perspective. As from Christian Malik on oil moments ago, we are thrilled to bring you now the perspective of someone out of Florida and West Point who has a commanding understanding of Europe, working with Admiral Stavridis at NATO, and of course his leadership as former U.S. commanding general in Europe for American troops. Ben Hodges joins us today. General, thank you so much. for joining us. I want you to convey to our listeners and viewers across this nation right now what is the number one thing our military can do to assist NATO and to assist Ukraine.
But the presence, Tom, of American soldiers is always such a powerful message of assurance to allies and also of warning to the Kremlin. The Kremlin does not want to take on the U.S. Army or Air Force or Navy, especially either alone or as part of NATO. So the deployment of American troops to the eastern flank of NATO, I think, was a good move and a strong signal.
If we further deploy Army to Lithuania, which you know encyclopedic, or we deploy Navy through the Bosphorus into the Black Sea as Ukraine begs Turkey to shut down the Bosphorus to Russian military ships, if we do that, how will that change it for Ukraine? What does it signal now for Ukraine?
Well, of course, Ukraine is not an island. It's strategically important for all of us, including Russia, because of where it sits on the Black Sea. It's why Catherine the Great stole Crimea back at the end of the 18th century. So Turkey, our ally, could really change the calculus for the Kremlin if Turkey were to close the straits, which it's entitled to do because of its sovereignty, to Russian Navy. That would make a significant impact on Russian thinking. What the United States and our allies are doing by reinforcing NATO's eastern flank, of course, tells the Russians, do not let this get out of control. Do not let it spill over into a NATO country, because then that will also completely change the situation.
What will you listen for from General Austin, now holding court as Secretary of Defense at the Pentagon?
I would like to hear him say that we are accelerating the delivery of weapon systems that Ukraine needs. I mean, we need something like a Berlin airlift in terms of quantity and speed to get more air defense systems, specifically.
Well, General, this is critical. Do we need to put U.S. troops in Lviv right now to go across from Poland, a NATO country, X number of miles into Lviv, and set up camp in western Ukraine to say enough?
No, I agree with the president here that we don't need to have NATO soldiers, American soldiers, inside Ukraine. What we can do is, working with our Polish allies, establish a line of communication that can send what we call white convoys, non-military convoys, carrying all the stuff that Ukraine needs towards Lviv, and then the Ukrainians would distribute it onward. I think we don't want to get to a situation where by our actions we end up with Russians and Americans fighting each other.
Ben, just to give you a sense, the U.S. actually just put out this headline coming across: no new troop deployments currently planned, but possible. Why is it so important to not have troops necessarily in Ukraine from the United States? Why do you think that is a tactical misstep?
So, let me caveat that. I was disappointed when the 150 National Guardsmen from Florida actually were pulled out of their training mission that has been going on for 6 years there in Yavoriv. I wish that they were all still there. But when you bring in additional troops, this then looks like escalation, and keeping all of our allies together is an essential part of our resistance. And so I think that in this case, we want to avoid a situation that ends up with NATO forces going against Russian forces when it's not in a situation of Article 5.
Ben, there has been discussion from European nations about contributing more troops to NATO in the surrounding nations, not necessarily directly coming into conflict with Russia. What's your view on their capacity to increase troops, especially given the non-military action that you've seen from the likes of Germany post-World War II?
Well, it's a fair point. I think what we're going to see is NATO reconsider our compliance with the so-called NATO-Russia Founding Act, and that we will go to permanent basing in Estonia, Latvia, Lithuania, Poland, and Romania of U.S. and or other NATO troops. We have not done this in a good faith effort that even though Russia had abrogated the NATO-Russia Founding Act, we were complying with the provisions that say no permanent basing. I think this is going to change, and I think we will see more NATO troops, particularly in the Baltic region. We really need to improve our air and missile defense in that region, and Germany and the Netherlands have a lot of capability where they could help here.
General, can I work through that line from the Ukrainian leader with you in real time? When you hear a line like this, Russian occupation forces are trying to seize the Chernobyl power plant. Our defenders are giving their lives so that the tragedy of 1986 will not be repeated. We've reported this to the Swedish leader. This is a declaration of war against the whole of Europe. Can you help me interpret that, General? What does that mean, that last line, when they go to somewhere like Chernobyl, and you know the history there? What does that mean?
So, two or three aspects to this. First of all, Ukrainian forces are achieving a lot of tactical successes against Russian forces. You won't get much coverage on this from Moscow, but for sure, lots of Russian aircraft, helicopters are being shot down, tanks are being destroyed. We're going to start seeing more and more video and reports of Russian losses, I think, as the situation becomes more clear. So that's important. Now, when President Zelensky, who I met 3 weeks ago in Kyiv, a tenacious guy, when he talks about declaration of war, of course, I don't take it in the means of a U.S. legal definition of declaration of war, but without a doubt, it is time for European leaders to be open-eyed and talk clearly about who we're dealing with. For sure, the Kremlin sees this as war, whether it's with ships, tanks, nuclear weapons, disinformation, cyber. Right. Russia is always in a war state of mind. It may not always involve weapons. In this case, I think President
that it didn't work and that military was a tough thing with maximum force. How we apply a power-like force against Mr. Putin.
Thank you, Tom. Well, of course, future war, which we're in already, will involve everything from drones, artificial intelligence, the advantages of quantum computing, but the disadvantages if our adversaries are using that, because that will break down the security of all of our IT systems, our communications networks. This is going to change things. And of course, their ability to disrupt our GPS targeting and navigating systems. So that's there. But what did we watch for the last 3 months? Endless video of rail cars carrying tanks and artillery and armored fighting vehicles, big steel Russian ships, submarines. So you get more new technology, but you still are going to have people in trenches, people still fighting with rockets and artillery. That's part of it. And Russia clearly intends to use blunt force. They're already employing this. But with more electronic warfare, they really have capability to jam that we have fallen behind.
General Hodges, we appreciate your time, sir, and thank you for being with us. Ben Hodges there, the former US commanding general in Europe. What we've learned in the last 30 minutes or so is that we will hear from the President of the United States, President Biden, to speak about Russia and Ukraine at 12:30 Eastern Time in D.C. So, Tom, just a little less than 2 hours from now. Also heard from a defense official the following. Just a bit of color on what's happening on the ground, Tom. Important details. The Russian ground incursions began into Ukraine at around 5 a.m. Eastern Time. And US officials estimate Russians have used 75 fixed-wing bombers and more than 100 missiles to attack. Just a bit of color, some detail there, Tom, on what's been happening on the ground.
Some of that is out on Twitter and, of course, unattributed, and we got to be very careful with it, John. But to get those numbers is really sobering because social media stuff is happenstance, and it's one here, one there, 5 planes, 5 jets, 4 missiles. This isn't. This is a summation with some real authority.
Big headline from the Prime Minister, Tom. The Financial Times reporting this, that the Prime Minister, Elisa, is pushing for Russia to be ejected from the Swiss system. So let's just Pause for a little bit. Run through that, Lisa. The importance of that, the British Prime Minister pushing for it according to the FT.
Well, it would take time, but as Anne-Marie was saying, it's the Gmail, essentially, of the banking system. It is all of the nuts and bolts of how they connect all of the international banks. Kicking Russia out would effectively isolate that nation financially. And what Russia has said is that they would then cut off some of the gas and oil supplies in response. This would be the nuclear option. The fact that the United Kingdom is coming out for this is a massive step.
I want to be very clear, Tom. This is a report from the Financial Times on the British Prime Minister Boris Johnson pushing for Russia to be ejected from the SWIFT system. That's where we are now.
Yeah,
Russia's invaded Ukraine. Now we're thinking about the response. We're going to hear from the president at 12:30, Tom, in a couple of hours from now. And we need to see if they're all on the same page on the big sanctions we expected after a major move from the Russian president.
And with the presentation of U.S. intelligence over the last number of days, John, I wonder if we'll see a whole nother bout of intelligence. I would say just all the different reports here, the first order condition for Russia, not away from the Black Sea, is to take the airports. That seems to be the real threat. I'll get it out. Thrust this morning.
Well, it's been a long morning, Tom. Let's go through the quote in that FT piece. The team putting this one together. It's according to one British official referring to his efforts to eject Russia from SWIFT. Johnson apparently also raised the idea at a meeting with the City of London executives yesterday. The quote, Tom, the Prime Minister is very keen on this. He's pushing it very hard. Let's see if he was successful on that call that took place, Tom, about an hour or so ago.
Working with us, of course, through the morning has been Michael McKees, Bloomberg economics and policy correspondent, and can be a discussion of the Fed. But, Mike, I want you to take all of your political economic skills of decades with Bloomberg and sum them up into what you've learned in the last hour.
We don't know anything. That basically is what it comes down to. We're still in the fog of war. We don't know how long this is going to last. We don't know what sanctions are going to be imposed. We don't know what the Russian reaction to that is going to be. So right now, the price of war, you'd call it, are guesstimates only.
Are you surprised that Fed officials have not canceled speeches today?
No, the impact on the United States will be indirect, and the impact on the people across America will be indirect, most likely through inflation. So they do have the message to give that they will be on guard for that. So far, the only two Fed officials who have gotten out and spoken are Tom Barkin of Richmond, who says it's too soon to tell what's going on, and Pat Harker of Philadelphia, who is a substitute voter, will be until July when the Boston Fed takes over again. But he said we should only do 25 in March because the uncertainty of this. Then you have over in Europe, the ECB's Robert Holtzmann, the Austrian, who has been among the most hawkish members of the governing council, saying they should pull back. Maybe this is going to delay rate moves from the ECB.
Right.
So basically, everybody wants clarity before they say anything.
And just to give a sense of how big of a pivot this is, Robert Holtzmann was the one yesterday of the ECB who came out and said that perhaps the ECB ought to hike twice in 2022. Very much a hawkish statement. There is an issue, and we were speaking about this with Michael Darda of MKM Partners earlier this morning, Mike, this idea of a Fed mistake, a policy error being to actually take some key off from what we're seeing over with Russia and Ukraine and not hiking rates as much as people were expecting, that would be the policy error at a time when oil prices are only exacerbating the inflationary pressures. How many economists who you speak to are kind of emulating that kind of argument and saying, if anything, this should push the Fed harder?
Nobody's really saying it should push the Fed harder at this point because we've still got 3 weeks until the next Fed meeting, and they've got time to see what happens with the overall economy. And they were probably only going to do 25 in the first place. So if they did 25 in March, it doesn't leave them any worse off. The idea is inflation going to be even higher for significantly longer? Does it feed the energy inflation that we're going to get? Does that feed into the core? The Fed isn't going to know that for some time yet. And that's the only thing that they're going to be concerned about at this point, unless we see the U.S. economy start to slow.
Mike, you know, a lot of people were worried that perhaps the Fed was out of ammunition to deal with the next downturn, perhaps the ECB even more so. How much are people talking about that this morning at a time when if the Fed holds off on rate hikes, hikes, they might miss the boat if some of the worst case scenarios come to fruition.
Well, it's not so much about being out of ammunition. It's about not having the right tools. The Fed basically has two. They can use quantitative easing, which only inflates markets and leads to more inflation at this point, or they can raise interest rates or lower interest rates, and neither one of those is going to affect Vladimir Putin. So until they have a better idea of what's going on, sidelined is probably better, and it isn't going to be the central banks who can make a big difference. Now, we know that the president of the European Central Bank, Christine Lagarde, is coming out tomorrow. She's already scheduled a news conference, and I think what that may tell us is that there will be a banking aspect to this, and that's where the central banks come in, because they'll have to enforce some of this. And also, if there is a problem with the system, they will announce that they're providing enough liquidity to keep everything going. Beyond that, it's up to the politicians and the generals at this point.
Mike McKee, thank you, sir. Thank you very much. Equities down 0.7 on the Nasdaq, dancing around that level for the last hour. On the S&P, we're down by 1.26%. I'd like to, if we can, Tom, just work through this Financial Times story, because some tremendous reporting coming together on the Prime Minister, Boris Johnson. He's very keen on this. He's pushing it very hard. This being to get Russia ejected from the SWIFT payment system. But it's the second paragraph that stands out here, Tom. Let me read it for you. This is the difficulty of the moment now. Quote, however, Olaf Scholz, the German Chancellor, warned Johnson on Thursday that his country would not support such a dramatic move, and neither would the EU, according to officials close to sanctions negotiations. Tom, that's the difficulty of this moment, for these leaders to get on the same page on how to respond to what's happened in Ukraine.
My understanding of this is the United Kingdom is removed from the hydrocarbon pressures of continental Europe. But, John, I'm going to be blunt. The dialogue has changed for everybody, including Team Surveillance here, in 24 hours. What was said on Thursday, Wednesday last, Monday last, it doesn't matter anymore. The reported news flow militarily and anecdotally, and I thought General Hodges was just brilliant. It's just simple, John. I would suggest the news flow coming to these politicians will stun them in the next 6 to 12 hours.
Lisa, what the Prime Minister of the UK wants is a very different story to what apparently, reportedly, Chancellor Scholz would like to see today.
Yeah, and it really highlights also some of the divisions. I mean, people have accused him of having pea shooter sanctions in response to Russia's invading of Ukraine. How much dissonance is there? Are we going to start to see some of those fissures in more cold relief at this point, now that they actually have to do something?
I want to get to Will Kennedy over in London just to build this story out a little bit more. Will, to talk about the commodity market and to work out what some of these sanctions might mean for your world as well. We've backed away from that 100 level on WTI at 97.62. On Brent, we're still in the 100s. Will, if I can come to you now, what are you expecting from EU leaders, from the President of the United States, the kind of sanctions we can expect that are announced today?
Well, I think that what's happened so far in the oil market, apart from the huge run-up we've seen in prices, John, is that traders are very reluctant to deal in Russian crude because they don't know what the sanctions are going to be. We've seen the trading of physical Russian crude sort of grind to a halt because there are a lot of refiners that don't want to touch it, and they're worried that sanctions either directly on Russian energy or on the financial system are going to make it very, very, very hard to deal in Russian commodities. And that's one of the reasons that we've seen prices jump this morning. So they'll be carefully passing whatever's announced by politicians, not just for direct mention of oil and hydrocarbons, but financial sanctions that make it hard to finance, buy, trade Russian commodities.
Well, Europe's in for a difficult time, and we know the President of the United States has tried very hard to keep the Europeans on side as they go forward with this effort to respond to Russia. There are a couple of options on the table. In fact, I can think of three. There is a gas tax holiday, another oil reserve release, which didn't have much of an effect and impact on this crude market a couple of months ago, and an Iranian deal. Of those three things right now, Will, what's the most possible from what you look at?
Well, I think all of that's on the table because they'll be desperate to temper the impact of this increase. But I think there are other things that we need to think about as well. What we didn't get in November, because there wasn't a reason for it, was a coordinated IEA release And that's on the table now. We've got a major geopolitical event. The IEA may coordinate a stockpile release across all the industrial countries. That's something we should be watching for over the coming days, I believe. And then, of course, there's OPEC. I think that Saudi Arabia and Abu Dhabi are going to come under huge pressure from Washington, but not just Washington, from Tokyo, from Seoul, from New Delhi, to say, as Tom said, everything we knew yesterday, forget it. We're in a whole new world and we need action. And I think for the Saudis and the Emiratis, they're going to come under a huge amount of pressure to add oil to the market.
The Saudi and the Abu Dhabi leadership and the pressures they will face, what is the power of, say, America to apply pressure on them? Or is it a more domestic and internal pressure of their royal families that, hey, we're part of this, we've got to help solve it? Which is it?
I mean, I think they're in a very difficult position because clearly they're allies with Moscow and the OPEC Plus alliance, and they would rather not get involved. But I think Washington is going to be very intense and say, you know, we have a long-standing alliance. We are help guarantee your security. Now's the time to help us out at this moment of huge international crisis. I think that Washington will be putting a huge amount of pressure. But I wouldn't discount the pressure that's coming from their big Asian customers as well. They're going to get it from both sides, Tom.
The policy's coming together now in real time. We have the reports and we're hearing from the leadership themselves. This was the report from the Financial Times that the Prime Minister of the UK, Boris Johnson, is very keen on pushing Russia, ejecting them from the SWIFT payment system. We know, according to FT reporting, that Chancellor Scholz is less keen on that. Lisa, moments ago, you caught this one. The Ukrainian Foreign Minister had this to say: "I will not be diplomatic on this. Everyone who now doubts whether Russia should be banned from SWIFT has to understand that the blood of innocent Ukrainian men, women and children will be on their hands too." Capitalized, Lisa. Ban Russia from SWIFT.
I think the most telling aspect is Olaf Scholz saying that he cannot get behind this right now, at least according to the Financial Times reporting. To give some perspective on this, Russia has said that this is the nuclear option and that they would respond by cutting off oil and gas supplies at a time when gas prices, natural gas prices in the European Union right now have been surging intraday more than 50%. How do they justify bearing the cost in the population at a time when they don't have that many replacements and we're not hearing about a sustainable system to supply them with gas and oil?
Tom, that's the issue, isn't it? We're doing this in real time.
Well, we're doing it in real time, and I'm going to be honest and direct in that we're starting to get images. They're rare images, but they're out on social, John, that really begin to show the bloodshed that the foreign minister was just speaking about. You wonder about the future of the leaders as Kiev is under attack from Belarus to the north. Russia's taken out the airports by all reports, John, and you just wonder the distance from those airports to central Kiev, the distance. The New York Times with a map showing three separate far western Ukrainian incursions where there's been events with the Russians. It is exceptionally fluid here to what, John, 90 minutes to the president's comments.
12:30 Eastern time, a dark day for that country. Lisa, the moves that we're seeing in commodities. Natural gas, where are we now?
Up 60%, 59.6%, just to give some sense. And it's good that Tom was mentioning the bloodshed. It is bizarre sometimes to talk about markets at a time of serious individual distress and families fleeing nations. This is what people are trying to game out in terms of the longer-term ramifications, and natural gas front and center, particularly for Germany, for France, for a lot of the continental European nations.
Is Will still there? Will, I'd love for you to have a final word just on natural gas. The dynamic we've seen, not just over the last few weeks, but over the last 12 months, Will. We've already had an energy shock, and we handled two.
Yeah, I mean, it's an enormous move. I think my final thought would be this is across all commodities. Oil, we've discussed. Natural gas, huge moves. Don't forget about food. At the moment, we can't export. Exports of wheat from the Ukraine have stopped, ground to a halt. Wheat prices are up to a 9-year high. They rose 15% in Paris this morning. This is going to be an inflationary shock from lots of different directions, energy, but also food. And I think we're only just beginning to process how big the impact can be.
Will Kennedy, thank you, sir. Just to go over some of this again, just the latest as the response comes together from the Europeans, from the UK, from the US. We're going to hear from the president at about 12:30 Eastern time. Sometimes that's late, Tom. Given the moment, it might be late again, but that's the marker, the one to watch. It's in the diary. The FT reporting that the British Prime Minister is pushing to eject Russia from the SWIFT payment system. They're also reporting that Chancellor Scholz is reluctant to do so. The Ukrainian foreign minister, very public, straight out there on Twitter, Tom, saying, get it done.
We've got a team in London and New York working on this morning, folks. And John, I am thrilled to tell you that Angela Stent will join us here. Her book, Putin's World, is definitive. She's with Brookings. She will join us before the president speaks.
We'll run you through the price action ahead of that too. We're down 1% on the S&P. Where are we now? About 90 minutes into the session, down 1%. In the NASDAQ, on the NASDAQ 100, we're only down 1/3 of 1%. Call it a quarter now. So this pain was global for the equity market. It's starting to become just a little bit more regional as we back away from the lows on the NASDAQ.
Yes.
And we're down about 4% on the equity benchmark in Frankfurt, Germany. Another hour with Tom Keene, Lisa Abramovitz and Jonathan Ferro on radio, on TV, for our audience worldwide. This is Bloomberg.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city.